The last time we talked, it's about central banks. That story has not changed. But for the BOJ, I mean, especially after all of this data with inflation still so far away, do you think it's time to change tact?
They don't have the choice, they have to carry on. I mean, they're going to have to do a lot more, actually, and probably today. I mean, what you mentioned about the CPI number, this is a dreadful number. I mean, if there's something to keep in mind, that's that number at this point. So what we would expect today is actually some further strong action, and it's needed, because if they don't do so, if the government doesn't come with, some extra stimulus on its hand, then, the numbers we are considering for the full year, the GDP growth out of Japan, the 0.7% growth, the 10% earnings growth out of the Japanese corporate this year, they'll be gone. And we're going to have to revise significantly our numbers. And this could be a no-growth year for Japan. So
if they don't act.
If they don't act significatively. Yes, at this meeting.
If they don't act, you're going to revise way down.
Yes, significantly way down, and it would take actually some very, very significant action today.
Like what?
In terms of monetary base, they should go at least up 20 trillion extra. So, I mean, the reference is quite high in our view, and the market expectations are quite high. If really they want to reduce and lower actually the yen valuation, if they want to boost the economy, that's what they're going to need.
David, I mean, the thing is, the money multiplier effect. It's not working.
It's not working. We agree. That's why,
So how is it going to help if you're going to inject more dollars that nobody's going to use?
No, that's absolutely fine. But it's still needed, because you still need to be supportive of what's going on, especially. And let's talk about a more global basis. The central banks at this stage, they have to be supportive of the low growth, but still there is a bit of growth, and we need to maintain actually that aspect of growth if we want to carry on and see some improvement later on. And this is where they have to be supportive.
Okay, let me ask you this. As an investor, we did a story this week where Japanese government, Japanese whale, right, BOJ, buying into equities, ETFs. At this rate, they're going to be a majority shareholder of, I'm being facetious, but of a lot of Nikkei 225 companies. This is a false paradigm. As an investor, you take a look at the fundamentals and you say, is the share price being propped up because Japan has to spend its money, or is it because it's healthy and we like the fundamentals and they're bringing in profits and the business is good?
But once again, we have to be pragmatic at this juncture, and we have to consider what's the situation now. Of course, we can spend time actually thinking about what will be the final impact and how they're going to, at some point, turn around and change the situation. The thing is that right now, we're still in a deflation risk environment, especially and particularly in Japan.
What do you do? So are you staying away from Japan right now?
We're neutral on Japan at the moment.
So where are you putting your money?
Well, we're definitely more optimistic about the outlook in Europe on the equity side. So we are still risk on as such. We're looking at equity, we're looking at high yield. And that is where, back to this idea on the central banks, they are supportive, they are protective, in particular of the banking sector. So they are.
Except the Fed, who might go in June.
They won't go in June. You're going to have the Brexit vote the week later. They're never going to, we don't think they're going to make a move so quickly and so early. At best, you would see an announcement in July for a move possibly in September. So it's still going to be extremely, actually, mild in terms of intervention or tightening within the world. And the liquidity conditions have never been that great. It's simply that the transmission through the banks is still not working.
Yeah.
And it will take time to see it improving. But watch out for the earnings growth, because the result season out of the US and Europe, it is actually better than expected. We're starting from a very low base, but these results are quite supportive, and the guidance in particular are guiding for a second half that could be slightly better than the first half. So this is where you get your chance to build actually some return this year, supportive central banks and performance out of the corporates.